Guys, welcome, it's me. Before you watch the video, don't forget for like, subscribe and comment. Okay, here I will read the article from Josh Horowitz and Scott Murdoch. Alibaba plans to add a primary listing in Hong Kong to its New York's presence, targeting investors in mainland China. It's become the first big company to take the advantage of the rule change in the financial hub, attracting high-tech Chinese firms. The e-commerce giant move announced on Thursday comes about Washington and Beijing sharpened security after Chinese complaints listing and after a devastating regulatory crackdown in China left Alibaba with a $2.8 billion fine and scrapped an initial public offering of its flight and growth. It also comes against the backdrop of an audit dispute between China and the United States, which is threatening to kick out hundreds of Chinese companies listed in New York. Analysts said the change shall give mainland China investors easier access to the share via link Hong Kong, which now as the stock connect secondly listing in Hong Kong, like Alibaba's current listing, are not allowed in the stock connect trade. The share climbed 4.8% by the close of trading, while the Hong Kong benchmark gained 1.7%. Buying stock connect means it will be more convenient for mainland China's investors to eventually buy the stock, so investors are happy to step in today and buy a stock in Hong Kong, says Louis, managing director of Wealthy Securities. Already present on the Hong Kong bourse with a secondary listing since 2019, Alibaba said it expects the primary listing to be complete by the end of 2022. Chief Executive Daniel Zhang said the dual listing would force a wider and more diversified investor base. The move comes after the Hong Kong Stock Exchange in January changed its rule to allow innovative Chinese companies operation and internet or other high-tech business with wide voting right or variable interest instead to carry out all primary listing in the city. Under a fee structure, a Chinese company set up offshore intended for oversized listing purpose that allow foreign investors to buy into the stock. Hong Kong is also launched pad for Alibaba globalization strategy, and we are fully confident in China economy and the future. Alibaba CEO Zhang said in a statement sweeping crackdown. Alibaba listed on the New York Stock Exchange in September 2014, marking what was at the time the last IPO in history. Since 2020, the company's share price has tanked in both markets as a sweeping regulatory crackdown by Beijing has battered Chinese tech companies. At the same time, U.S. regulators have stepped up security of accounts of Chinese firms listed in New York, demanding greater transparency. While boring scope, a core focus of China crackdown has been regulatory seeking to expand oversight of public offering. Last year, Chinese authorities launched a program into ride-hailing giant Didi Global just after the listing in New York, citing data privacy concern. The company later delisted and began preparation to list in Hong Kong, leading analysis to interpret the probe as driven by a decision on Beijing part for data-rich companies to list domestically. If decoupling, Alibaba also found itself in similar crosshair when regulators abruptly halted and group planned $37 billion IPO in Hong Kong and Shanghai in late 2020, concurrent with the announcement of its dual primary listing. Alibaba said on Tuesday in annual financial report that several and group executives had stepped down from their posts in the Alibaba partnership, stop decision-making body for a commercial giant. Okay, maybe that's all. Thank you for your watching. Don't forget to like, subscribe, and comment. Bye.